I bust the tables, I'll wash the dishes and things like that. And I'm not telling you that to make myself feel better, but ultimately, as a small owner operator, I will literally do anything that's moral and legal to help my company be successful. And if that means I have to wash dishes or shovel snow, I'll do it.
What I do is inconsequential. Why I do what I do is I get to shorten people's journeys every day. What I love about our hospitality industry is that it's our mission to make people feel cared for while on their journeys. Together, we'll explore what hospitality means in the built environment, in business, and in our daily lives. I'm Dan Ryan, and this is Defining Hospitality. This podcast is sponsored by Berman Falk Hospitality Group, a design-driven furniture manufacturer who specializes in custom case goods and seating for hotel guest rooms. Today's guest is a hotel executive, real estate investor, and hospitality entrepreneur. He's worked with major hospitality brands, including Marriott, Hyatt, and IHG, while also redeveloping independent hotel properties. He's also launched award-winning real estate technology companies focused on innovation, property value, and tenant experience. He's the CEO of Scholar Hotels. Ladies and gentlemen, welcome Gary Brandeis. Welcome, Gary.
Thanks, Dan. Thanks for having me.
I want everyone to understand that I met Gary through our mutual friend, client of mine, architect, designer of yours, Craig Kalasian, who is just, well, he's not just a client, he's just a really awesome dude and a great friend. And we did the Nittany Lion together in College Station. And
State College.
Oh, not College Station. I'm sorry.
It's okay. College. It's okay. It's okay.
I get confused. College Station is what state? What is it? College Station.
Texas A&M is.
Texas A&M. Yeah, we don't like them. I'm not a huge fan of the Nittany Lions either, just because they beat up on USC so badly a couple times. But what I can say is they have one in the Northeast anyway, and I'm sure beyond, but just having lived in New York City for a long time, they have a very rabid fan base. Probably one of the most rabid, I would say, in the Northeastern United States. Is that safe to say?
I would go further than that, Dan. I think if you look at the Penn State community, and you can ask Craig this, and I challenged him when we started our project because he had never been to State College, didn't really know much about the university. And I said, Craig, when we're done, you're going to realize the reach that this university has. And I think he would hold me to this, that he felt like he didn't realize the reach the university had. In fact, Craig's is an owner of a restaurant. And he said, I didn't realize like half my dishwashers were students at Penn State that worked for me in the summer and things like that. So I think if you look across the country, we have the largest alumni network in the country and things like that. But I think I'm in South Carolina right now. I see Penn State shirts and hats on people walking around. I've been in California. I was in Mexico earlier this year, and I saw a guy walking down the street in Mexico City with a Penn State shirt on. So I think we're pretty popular across the nation. But
okay, but
I'm biased. I'm biased.
Of course you are, and I'll forgive you for that, for being so biased towards the Nittany Lions. But just refresh my mind. How many rooms is the Nittany Lion?
So 230 guest rooms.
Okay. Around State College, Pennsylvania, how many rooms do you have total?
So right now we have 930 hotel rooms in the State College market,
wow.
The Penn State market.
Okay.
We have another 70 under construction right now. So we'll actually be at an even 1,000 come the end of next year.
So that's incredibly remarkable for any one ownership group to have in any area, I would say. Yeah.
Yeah, I think if you talk to other investors, so I'm a real estate investor too. We're an investment company and an owner operator, but people would say, well, that's not a very good investment strategy. Some of the things you want in an investment strategy is diversification, right? Of property type, of location, of lots of different things. So we're definitely heavily concentrated, from our portfolio in that market. I think what makes me sleep at night is that the market's basically supported by a $10 billion public university. That is a significant economic development engine and provides very consistent and reliable demand for our assets. And I would also make the comment that if you ask me, again, very biased comment, we have the best assets in the market, the best location. And so long as the university continues to grow, so long as the university continues to have events and need for hospitality services and products, et cetera, then we feel pretty good about our business model there. But I think that's consistent across a lot of college markets.
And you also have not only with the university, but the consistent fall draw of Happy Valley and all the shenanigans that go on there with the football team. Not to
Yeah.
mention, I will say, one of the greatest ice cream experiences I've had as well there, because there's a big ag school and Penn State has a big dairy operation. Is that correct to say?
We do. Ag sciences department and the education around agriculture is significant. And Penn State started as a land grant university. It was essentially to teach Pennsylvanians back in the 1800s how to farm and things like that. So yeah, big ag sciences. We have the creamery, which is well known, ice cream. Ben and Jerry's took their ice cream class there back in the early 70s, I believe. That's a little bit of a claim to fame for the creamery. But I think also with college markets, people think, well, you make all this money during football games or graduation, but most college markets, if you look at the 10 or 12 legitimate college markets in the country where you have a small town with a big university, we're busy 11 months a year in State College, as an example. And we're also in Radford, Blacksburg, in Morgantown, and Syracuse, and other college markets. And there's a little bit of a misnomer with college markets. We do great on those special event weekends, but as you know, Dan, I can't make a living and we can't support our business with just special event weekends. We have to be busy Sunday through Thursday. And these college markets really generate significant business during that time frame as well. So
I'll also share, as we transition to get to the hospitality question, that Craig and I were asked to speak at the hospitality school at Penn State. So I think, was it last year or a year and a half ago that I first met you? I think I met you way before, but that was like, we had dinner after we spoke at the event. That was really cool. And I love it when I get asked to speak in front of the young folks, right? The people who are just entering the hospitality career, because many of them think that they're going to go into revenue management or they're going to go into sales and marketing or whatever. But invariably, when I sit down and talk to them and tell them the entire ecosystem of business and entrepreneurial opportunity that exists within properties, most of their minds are blown, because they go in with this kind of single track. Oh, I really want to do this and I like that. Oh, I didn't know hospitality had so much else to do. And with that,
really,
what drew you to hospitality? What does hospitality mean to you?
Hospitality is about, like any business, serving your customers, right? Making sure your guests and customers have a great experience so that they tell their friends and family, they come back again. But the other thing I'd put on that, and this goes back to my background, is ultimately we're in business to make a profit. And so how do we provide a great guest experience, but also make a profit at the same time? And those two things are not mutually exclusive, right? You hear a lot from hospitality about providing a great experience and memories and things like that. But you don't necessarily hear a lot of times about hoteliers or people that run hotels, or certainly you don't hear from the brands about profitability. Ultimately, we're in business to make a profit. I've got investors that want to make a return on their investment. I've got banks that loan me money that I have to pay the mortgage every month. And ultimately, if we can have a profitable hotel, a profitable investment, and I can give a good return to my investors and pay my mortgage, then guess what I can do? I can attract and retain great people. I can pay competitive salaries and provide great benefits. The second thing I can do is I can maintain my property. If I have profitability, I can reinvest that money, part of it, back into the hotel to make sure that, the mechanical systems are working well. There's hot water. The water pressure is great. If a piece of furniture breaks, I can fix it. And then the third thing.
But our furniture doesn't break.
Your furniture doesn't break, but some does, right? Especially over time. But and then the third thing we can do is be a great community partner, right? We can be hotels are such a big fabric of any community, especially college market like we're in. And so we want to be a great community partner. We want to sponsor events, invest in charitables, nonprofits, provide, hotel rooms. One of the things we try to do is on football games, a lot of the parents of football players and basketball players want to come see their son or daughter play a sport, and they may not necessarily be able to afford a room on a very expensive weekend. So we try to do things like that. So I think what's lost sometimes in hospitality is the fact that ultimately we are a business. We're in business to make a profit. And if we don't make a profit and we don't invest well, we don't make a good investment, then our ability to provide a good experience for our guests and maintain our property and attract and retain great talent is significantly hindered by the fact that we didn't make the right investment or we didn't capitalize it correctly. We over leveraged that asset on the acquisition. And so a lot of people think, oh, make sure the room's clean, make sure the front desk person smiles at you, which is obviously really, really important. But if you don't go into that hospitality investment with the right structure, the right capital, a good capital partner that understands the highs and lows of hospitality, then everything I do after that investment, I'm kind of, if I don't do it right, then I've got one hand tied behind my back as I try to execute on the hospitality side. So we consider ourselves, and a lot of people frown when I say this, is that we're a real estate investment company first and a hospitality company second.
Like in the Danny Meyer lexicon, if you take care of your team, you take care of your vendors, you take care, or your community, your vendors, I forget all of, there's 5 of them. And then the last one in order of importance are the investors, right? Which is really interesting because his whole take is, look, if you can do the other 4 without thinking about the investors, your investors are going to benefit from a profitable company, because I really get the sense that you love, oh, okay, yes, you like the returns, you like the profitability, but you really love being a pillar in and around Penn State University, right? And to me, that's really exciting. It's when people ask me what I do, I was like, oh, I furnish hotels, but that doesn't really excite me. I love it. It's what I do. It's my vocation. But more than anything, I get to have these conversations, or just not even the public ones, just the impact that I can have just with people who haven't considered thinking about something a different way. I call that, like, oh, I love shortening people's journeys, because I love reading, I love learning, and I love sharing everything that I've learned with others from my experience, not so much in advice giving, but in sharing with others. And in this, and speaking from experience here, I want to go out on a limb, and I'm going to make I don't know, what's that SAT question? Is something is to something as something is to something? There's a certain type of question that I can't remember what it's called. But Apple did not invent the mobile phone, right? They just did it better, right? And what I want to say is, one of the things I've talked about a lot, I don't know how, a lot is relative. So I don't know, it's probably come up 15 or 20 times on these conversations. When someone asks me what I think one of the most exciting brands in hospitality that have come up, and you can argue whether it's good or bad or whatever, but Graduate Hotels to me was really cool because they took a very tight thesis of college towns and really went hog wild and built a cool brand that they wound up exiting for a lot. I don't know how much or what the deal was, but I think it was a lot. It was multiples on revenue, not necessarily on profit, for the brand, not necessarily the properties. But that's a whole different
brand only, Dan. $210 million Hilton bought them for.
Right. And do you know what was that on earnings or revenue?
I think it's, obviously the brands operate on revenue.
Okay.
that the one of the downside of brands is
I
they
heard
really
something
care about
crazy, like
profitability.
12 or 13 times revenue.
Yeah, I mean, they only had, I think at the time when Hilton acquired the brand, they had 26 hotels. So small acquisition for Hilton typically. But in talking with folks at Hilton, they saw it as a bigger opportunity. And in fact, they just launched the undergraduate brand, which I guess is the lower level. I'm not sure I understand it. I think I don't get it, but I'm not that smart.
To me, as an entrepreneur, for all the classes and the books I've read, it always says, if you can own 7% of a specific market, that's a great business, right? So to go and be so niche and niche down to just colleges is really cool. But they weren't the first, was the point why I brought up Apple, right? There was Paul McGowan and Study Hotels. I don't know when you started yours, but there were other ones that were trying to do this or doing this, But then Graduate came in, I guess they raised a bunch of money and they were just able to kind of expand and scale really quick. Sometimes scaling for the sake of scale is not always the best, right? I wish I read this book by Bo Burlingame called Small Giants, where they use like Zingerman's up at University of Michigan. I interviewed someone from there once, and Zingerman's made a decision after trying to scale for the sake of scale to just go deep into Ann Arbor and just own that experience in Ann Arbor and just be the best that they can be and be a pillar in their community.
Yeah.
So what do you think has taken so long for people to realize that college towns, if done well, can be a really profitable endeavor and also really fun because you're able to get so specific in what you're bringing to the market?
Yeah, I think it's a really good idea. I think Graduate certainly brought the idea that these markets are different than traditional hotel markets, whether it's a big city, a small town, at an airport, or along a highway, right? It's a very different standpoint. And we've chosen to go deep and make sure that we're experts in how we operate, sell, and run hotels in college markets, because there's a lot of intricacies to it and differences to other hotel markets and models. Our staffing models are different. Our revenue strategies are different. Our sales strategies are different. So it's very, very different. It's almost like I equated it to, apartments, right? About 25 or 30 years ago, student apartments became sort of a niche of the apartment business. People didn't really look at student housing. Students on near college campuses different than regular apartments. But a few folks started to make it known that, listen, it's different running and selling apartments to students than it is to non-students. And so now if you look at student housing 25, 30 years later, from when it really became sort of a different subset of multifamily, it's now its own industry into itself. It's an asset class, it's institutional. It's some of the most valuable apartment multifamily buildings anywhere, right? You build student apartments across the street from a major public university, it's like gold in a way. And so Graduate showed that there is differences in this market. You can hit the heartstrings of your guest more so than you can in another market. I think what happened with Graduate, and this is just my opinion, they expanded so rapidly, Dan, and they didn't focus as much on the real estate deal as maybe they should have. And so in my opinion, and I think I've tried to buy assets in markets where they've bought other assets, and I couldn't come close to the numbers that they were paying. In fact, when I made a couple of offers in markets where they were, the response was, well, Graduate just paid a lot more for this other asset in the market. Why can't you pay me the same? And I'm like, well, because I'm a real estate investor first. I make a good real estate deal and then I can execute. If I can make a good real estate deal, I can execute significantly better when I'm hiring people and designing and building and everything else. And so I think what happened was they built this brand very quickly. It got the attention of Hilton, and Hilton said, hey, we want to be in that market. And so Hilton bought the brand. They didn't buy the real estate. And right now we've looked at 4 or 5 Graduate hotels that are either in foreclosure or the lender either in foreclosure or they've already foreclosed and the lenders are trying to sell notes. And I think that's that's not a symptom. It's the result of potentially that really quick expansion, trying to buy as many doors as they could to sort of get that brand out there. So not mistakes that we want to make, in a sense of making sure we make a really good real estate investment first, and then we execute on the hospitality side. So they were able to sort of bring the idea to the market in a big way. And now we're starting to see some others. You're right. The Study Hotel, I think in New Haven at Yale, was really the first.
Yeah, I did that furniture when it first opened. And so that was really what opened my mind to it. I don't remember what year that was, 2004, 5, 6, somewhere in there.
I think somewhere around there. And that was an old Holiday Inn, I think it was, that they renovated.
Right next to, it was great. It's awesome. Yeah. And they built it in a way where it was almost as if it was a fancy dorm room, but like research library at the same time. And it had a really good feel. And I give Paul a lot of credit for that. I mean, not that I have to give him credit for anything. He did it on his own, but it was like just taking that. And I think he was one of those guys. I think he also worked at Starwood originally in Starwood back then was really launching W and I don't know, just being very innovative in respect to how things were done up until that point. And it's a great product and it's still awesome. I stayed there a couple, maybe about a year ago. I stayed
Yeah.
there because my son was doing some football camps up there. But
And there's a graduate right next door.
yes, actually, I don't know if it is a graduate anymore.
Oh, it's
I
not?
could be
Okay.
wrong.
Yeah, I could be wrong too.
I went to go see my favorite band, and I rented a room up there.
Oh, there you go.
Well, not my favorite, one of my favorite bands. But one of the things in going to profitability, and also I want to tie this back to a past guest, another good friend of mine, Dave Kaplan, and his business partner, Alex Day. They have this company, Death & Co. And they've been expanding. It's like cocktail forward bars, just awesome. But a couple of years ago, they started this model where they would sell shares in their businesses to their biggest fans, right? And they have all this merch and they have cocktail codexes and cocktail menus and cookbooks for cocktails. And they've really carved out this really big niche or small niche, but scaled it. But they used investment from their rabid fans, right? And then when I was talking to you a couple months ago, you mentioned this thing. I thought you were talking about Bob Marley for a second, but it's this Reg A, not Reggae Man, but like
Right.
Reg A, like Regulation A or something like that.
Correct.
You mentioned your capital partners in the 1,000 rooms that you have in and around State College, but it seems like an interesting way, especially if there's a rabid fan base, to democratize hotel investment. So I'm not a finance guy. I appreciate innovation and the risks that entrepreneurs take, but can you just tell us a little bit about like how this is teed up and what makes this different and what your plan is for either all of the rooms or some of the rooms or all of the hotels or some of the hotels as far as democratizing investment in hotels in State College from the rabid fan base?
And I think it could resonate in any college market where you have a large base of people that really are connected to the community in lots of different ways. And so we're fortunate to have sort of a large base in State College, which is supported by Penn State University, which is one of the largest public universities in the country, 50,000 students, 1,000 clubs and organizations, 880,000 alumni that are alive and living across the globe, and probably another million more that we don't even know about. And so we've built our portfolio over the years, like most real estate companies. We raise capital through either a commingled real estate fund. We've done 4 commingled real estate funds. We also do one-off deals where we raise capital on a project by project basis.
Just pausing 1 second.
Yeah.
What's a commingled real estate fund?
So a commingled real estate fund is just a pool of investors that you bring together, and then you use those collective dollars to make investments.
Oh, so you're not doing each property as its own entity. You're raising a fund and then
It's a fund.
and then allocating that capital as it makes sense with the fund.
Correct.
Okay.
So we have 100 investors. We've got $50 million of capital. And then we, as the general partner, have discretion to invest that capital versus, hey, I've got a building, I've got a hotel I want to buy. I need to raise, I don't know, $10 million. I get 10 guys or 10 gals to give me $1 million each, and I'm off running and getting my deal done. And so our investors to date have been high net worth individuals, family offices, estates and trusts, and some institutional capital as well, all sort of fitting into the high net worth folks. So minimum investments typically $250,000, but most of our investors come in for more.
And you have to be an accredited investor as well, right?
We work.
What's the threshold for accredited investor as well?
Yeah, so we used to work in what's called the Reg D world, which is accredited investors only. So we would have offerings that were only available to accredited investors. And the accredited investors, the government defines an accredited investor as someone that has a certain level of net worth outside their primary home and has a certain amount of annual income for the last 2 or 3 years. So I think right now it's $300,000 or more of annual income, and then $1 million of net worth outside your primary home as an accredited investor.
I don't know what the average income is. I think I saw it or read it in the news the other day. It's probably $80,000 or $100,000 per family, average or median. I don't remember in the United States, but just that threshold of $300,000 eliminates everyone from so many people from. Now, granted, it might be riskier, or not, and then maybe riskier, but maybe not, it's not liquid typically, right? Because you're
Yes.
invested in this fund in a real asset. But it also seems unfair that the average American can't invest in real estate, number one. And number two, it seems like Wall Street maybe lobbied to get that rule there to keep all the money going into the stock market. I don't know if that's true or not, but that's, I just think that accredited investor thing seems to be, I think it has a good intention, but I think it's not,
Yeah.
it's not great. It's not the best intention. It's a great
Well,
intention, but it's not, I don't think it serves everyone the best way.
well, the intention is to the government and the SEC and the IRS want to protect investors that may not be as sophisticated at looking at investments versus someone who potentially has that level of net worth and success per se, that they're more sophisticated and can understand investments and look at the risks and rewards and manage that to their comfort zone, right? And so what the government has done, I think 4 or 5 years ago, created a Regulation A opportunity that you can raise capital from non-accredited investors. Now, accredited can invest too, right? It's not like we're excluding them, but it allows us to market an offering or an investment to non-accredited investors so long as we submit our offering documents to the SEC. They have a chance to review them and approve them. And then we also have so if you do a Reg D, which is an accredited investor model, you have no reporting requirements. You don't have to do anything for the government. You don't have to send any financial statements in or anything like that. And you just follow your tax return just like anybody does, and you're done. A non-accredited investor model or Reg A model, you have to submit your financial statements twice a year to the SEC for review. You have to have a full audit review of your investment fund, and then you have to file your tax returns as well. So under a Reg A model, we're submitting semi-annually our financial statements, and then a third with the audit. And so a little bit more regulated. The government looks at us a little bit differently than a Reg D, because they want to make sure that we're not doing anything nefarious with the numbers and everything else. So it's up to us, up to me and my partners on the GP side or the management side of the investment to make sure that we're managing the investments well, we're maintain good internal controls and doing the right accounting and reporting, and then, putting those financial statements into the government for their review and making sure that we're looking out for our investor partners. We have a fiduciary responsibility to our investors to make sure that we're doing right by them and right by the properties and right by everything that goes along with the business. So it's an interesting model. I think, just as this other Death & Co. company that you talked about, is the benefit that we have in college markets, which is different than any other market, is that we have this group of people that have such a personal and passionate connection to that community that we think it works really well in hospitality. So for example, at Penn State University, where we have 6 assets, soon to be 7, we've taken 5 of those assets and put them into this investment pool. And we are now offering shares to be bought. So we're going to exit our Reg D investors, our high net worth investors, assuming we're
So you're cycling their capital out in a sense. You're saying,
Right.
hey, I'm raising this separate pool from these Reg A investors of a minimum $5,000 check at whatever value, and you guys are going to make whatever rate of return you make from the investment the whole time. They're going to be happy, and then this whole new pool is going to be happy because they're going to be able to own a piece of something that they're passionate about and also
Correct.
make
So
money.
that's the plan, right? So the idea is that typically with a Reg D offering high net worth accredited investors, there's a limited life to those investments. It could be as short as 7 years, 10 years, 15 years, whatever it may be, whatever the GPs decide to do. So for us, it's time to move. Those investors are wanting their capital back and to recycle it into new investment. And so the idea is that we're going to raise what we call evergreen capital or long-term capital from folks that are connected to the community. They could have gone to school there. The kids could be at school there. They may just be passionate about the university for other reasons, whether it's sports or arts or culture or other things. And so with university hospitality, we're very fortunate because we've got this built-in pool of people that love the community, love the university, and are very passionate about it. And so, but they also return multiple times a year to come back to the place that they're very connected to. So we think that if we can get in front of those folks and say, listen, you come back to State College, Happy Valley 5 or 6 times a year, why not own a piece of it? You can be a real estate investor in these 5 hospitality assets. You'll get the benefit of that ownership through real estate, with dividends, depreciation, shelter from taxation for the first few years. And by the way, we've also created a hospitality program around the investment. So when you come back, you'll be part of this investor hospitality community. We're calling it the Scholar Owners Club. And if you're a member of the club, that means you made an investment. So you'll have certain hospitality benefits, right? Typical hospitality benefits such as, it could be early check-in, late checkout. It could be it's dining discounts at the bars and restaurants that are in our hotels. Special early access to special events. So for example, home football games, those rooms sell pretty quickly. If you're an investor or part of the club, you'll get early access to those rooms so that you can get the rooms you want for whether it's football or other events, things like that. And then we'll have special events. So the Friday night before each home football game, we'll have an investor event at one of the hotels that's exclusive to those investors. One of the challenges in a small college town on a Friday night before a home football game, where you have hundreds of thousands of people coming to the community, is you can't get into bars and restaurants. The lines are really long. You can't get reservations. And so we'll have special events just for our investor partners as part of this Scholars Club, where they'll be able to get into a restaurant and have something to eat, a drink, and things like that. So it's combining this passionate community with assets they already know. Most of these people have stayed in one of our hotels already, and connecting with them both from an investment perspective, say, hey, do you think this is a good investment? You have to decide for yourself. But potentially more than that, you want to be part of this really, special community or exclusive community of investors that now all own a piece of these hotels that they stay in. And I often use the analogy, Dan, of could you do this with other assets in a college town? And you probably could, right? If I owned 3,000 student apartments at the University of Georgia, as an example, another big school in a small town in Athens, could I sell interest to Georgia grads? Maybe, because they would probably understand the fact that student apartments in downtown Athens are always going to do they're going to be financially successful, right? They're going to be well occupied with good rents.
But those leases turn over once a year, once every 9 months. So it's not like they can go breathe the air and stay in there and experience.
Well, that's the point, right? So if you're investing in these student apartments and you can walk by them, right, when you're visiting the University of Georgia, you can marvel at your building, but in the hospitality space, you can sleep in the building, you can eat and drink in the building, you can meet your friends in the lobby and hang out with them. And so this Reg A community-based capital raising program works especially well with hospitality. And it probably works the best. And I'm not even sure the other 4 real estate asset classes can even come close to it.
So I have a question about just communication, because when you cycle out the capital of those 5 hotels that you have currently, right, and it's time for them it's a 5-year or 7-year hold or whatever the plan was originally. When you cycle those out, I don't know how much you're raising, but it would seem to me like you're going from a small investor pool to a much bigger investor pool.
Mm-hmm.
And then that much bigger investor pool, I don't know, it's chatter, it's communication. I know that you'll give reports and be proactive about that, but I'm sure there's so many questions. How do you handle that, turning the volume from 5 to 11 plus, from just all the other $5,000 checks versus much bigger checks?
Yeah, so we're going to be moving to what I call a high touch investor model to a low touch investor model, right? Mm-hmm. So I probably within our different funds, some are closed, some are still active, probably have 100 investors that are in our universe of capital. Mm-hmm. And so it's relatively easy for me to communicate with those 100 people. Some of them call me on my cell phone at various times of the day, at night and weekends. And some, when we send out our reports, they can call me or text me or send the email back with questions. And we're good at communicating that way. But we potentially, if we're trying to raise $75 million, which is the cap on a Reg A, you can't raise more than that. That's by the government's definition. if we essentially could get 15,000 people to write us a check for $5,000. That's the max, right? Because we have a minimum investment of $5,000, 15,000 times $5,000, $75 million. Now I've been relatively surprised. A lot of the investors that have made commitments so far, we've only been doing it for about 2 weeks, are investing more than $5,000. So if we continue down that trend, maybe we end up having 10,000 investors. And so how do you communicate with 10,000 investors? How do you do it, right? I mean, obviously public companies are doing it all the time, right? You know, Apple has millions, hundreds of millions of shareholders potentially, right? So it's a matter of using technology. It's a matter of getting information to the investors so that they can read it, having the ability to answer questions through public forums and things like that. So the way we're going to do it is we're going to issue a quarterly report to our investors, potentially a dividend along with that report will show up in their bank account, which also is heavily automated. And then probably twice a year I'll do a video call like this with our investors where they can log on and hear me talk about the results of our last 6 months, how the hotels are doing, what's happening in the market, et cetera. So we're going to sort of act like a public company in a way. Like we're going to disclose everything. We have to disclose to the SEC, and we're going to disclose to our investors. Transparency is really important. And what I would tell you, Dan, is over my 35-year real estate career as a developer and investor, I'd love to tell you that all of my deals have been great, right? Everyone's been a home run. We've made tons of money for all of our investors, but it's not the case. And I think
it's an investment.
It's an investment. Things could go right, things could go wrong. And we've had deals that haven't gone very well. And I think we've always tried to take the approach of transparency. You know, we went into the deal thinking this, but other things happened that changed the course of our strategy. We had to pivot. Things aren't going as well as we'd like. Here's a couple of ideas on how we're going to fix the problem or get out of the challenge that we have. And so we're going to be transparent with the investors. I think in a college town, a small town with a big university, again, this same model over and over again, is that we're a little bit insulated from the traditional ups and downs of the general economy because we are supported by one significant demand driver, right? Which is a large public university. Now, the great thing about a large public university is it's a dynamic demand generator. It's just not one thing, right? I gave an example earlier between right after Labor Day and before July 4th, State College, Penn State University, gets about 120,000 applications a year from high school students. About 40,000 of those people will visit State College for one night after Memorial Day and before July 4th. These are high school juniors who are thinking about where they want to apply to college when they start their senior year of high school. And so in this little town in central Pennsylvania, we get 40,000 room nights over 6 weeks.
Wow.
We're really busy from after Memorial Day up until July 4th. And so when I talked about being busy 11 months a year, that's part of that cycle that we go through every year, right? And so I can tell you pretty confidently that every year after Memorial Day and before July 4th, we're going to get thousands and thousands of high school juniors coming to town with their mom or dad or both, or whoever they hang out with, right? To come and stay over one night, tour the campus. The university has 3 tours a day, 7 days a week during that time. And it's a really busy time for us. And it's actually a fun time because people are really excited to be there. They're excited to be there with their child to see the campus and think about, hey, do I want to apply to school here or not, right? And then they go away. And from after July 4th to the middle of August, there's other tourism, there's big events in the market, arts festival and other things that are happening that bring people there. And then by the middle of August, we're in the football season.
Hey, everybody. We've been doing this podcast for over 3 years now. And one of the themes that consistently comes up is sustainability. And I'm just really proud to announce that our sponsor, Berman Falk Hospitality Group, is the first within our hospitality industry to switch to sustainable and recyclable packaging, eliminating the use of styrofoam. Please check out their impact page in the show notes for more info.
So I have a question. I've heard this type of Reg A investment is referred to as crowdfunding, correct?
Yes,
Crowdsource.
I think you could certainly give it that nomenclature. I think there are companies that have sort of formed the crowdfunding industry. But a lot of the crowdfunding, Dan, are accredited investor funds.
Really?
Yeah.
So is there a superlative associated with this with respect to what you're doing in State College as far as being the first in hotels or the first in college towns? Or the reason why I'm asking is I haven't heard of this type of investment very much for hotels. And I think it's only been around 5 years. So I'm just curious if there's a superlative, number one. And number two, when this is successful, what do you think how do you think that'll change what the conventional thinking in hotel development or investment might have been? Right. And basically, what do you think conventional hotel investment or development might learn soon might be wrong, and everything is wrong. There's always those paradigm shifts where things change. Or does this really, in your estimation, only work in super tight niche down markets?
No, I think it works extremely. I think it can. Now, we haven't done it yet, so we're still in the early stages of doing it. I think if we're successful in doing it, it's going to be because we were able to get in front of those thousands and thousands of people that love the community, that want to be part of it in a deeper way. People ask me all the time, how can I invest in your deals? And there's, if they're not an accredited investor or don't have a significant amount of capital, then it's hard for them to be in the deal with us. So I think this does a couple of things. One, it works really, really well in a community where there's these call them what you want, super fan, passionate people that love the community. They come back over and over and over again, right? Ultimately, if we're successful in State College, I'd like to do this in other markets that have similar demographics and similar structures. I think it works really well. I think if you think about, let's say you and I were developing a Marriott Courtyard in, Johnstown, Pennsylvania. Could we execute on this Reg A concept to raise money around a branded hotel in a small town of Pennsylvania that has no significant?
Yes, you can market to all of the relatives of John Murtha. Is he from there?
He is from there.
My mother-in-law is from there too.
Oh, okay. There you go. But my point is that, with a college community, so if you look at social media right now, on social media, there's I think 770,000 people that follow Penn State University on LinkedIn. There's, I don't know, if you total up all the people that follow Penn State related Facebook pages on Facebook, millions of people. We're doing a paid social campaign right now on Meta and on LinkedIn to try to get this Reg A offering in front of those people. And so we're able to do that, right? When we have a paid social campaign on LinkedIn, the 770,000 people that have Penn State in their
oh my God, it's like shooting fish in a barrel.
In a way, right? Because where else could you do that, right? If you owned a hotel in downtown Boston, wanted to advertise on Meta or LinkedIn,
how do you slice and dice it?
You can't.
Oh, that's super interesting.
But we can in university hotels, because social media is where all these rabid, crazy, Kool-Aid drinking people live for communication about the school. Just the parents page at Penn State University alone has 30,000 people in it. They're all moms and dads of students that are going there right now. So not only can I
go on to my daughter Vivian's graduating class college acceptance, or where they're going, I forget what it is. There's a handful that are just going there, and you multiply that by all the high schools and the parents. Wow, that's pretty cool.
So think about it. Let's put the Reg A aside for a second. Think about me marketing my hotels to my potential audience. I know exactly who my customers are in a university.
What did this Reg A launch and marketing to that? How did that change your marketing strategy with your marketing teams?
Yeah. Well, we just got started. So we're only a couple of weeks into the paid social campaign to get the Reg A out into the world. But I think it's showing us how powerful the connection to these college communities are. And if you've got a great hospitality asset in that college market where you want to get eyeballs on your property, you know exactly who your customers are. And so it's a significant advantage in the university hotel space. And it's one that we try to take advantage of. We have 2 full-time social media people that work in our little company. We don't have a huge portfolio. So So a prime focus on social media related to making sure our properties are seen by those people on Facebook and LinkedIn and Instagram and things like that is a big part of our sales and marketing push, outside of some of the branded hotels and independent hotels we have as well. So it's always going to be a part of it. We're continuing to invest more and more money in paid social as well, but also organic social. You talked about the Nittany Lion Inn. We acquired that from the university in 23. One of the most iconic buildings on campus, one of the most important buildings on campus. We did a significant renovation in 16 months, and now the property is performing really, really well. We're obviously very happy with it. I think the university's happy with what we've done, and we're getting really good feedback from the community and that they love what we did. They feel like we preserved the history of the building, but we modernized it at the same time. And so the organic volume through social media just for that asset alone is significantly more than we ever thought.
I have a specific question about that. I didn't realize that you bought that from the university. So I would assume the university, look, it's an amazing university, but I would think when it comes to design and experience, even though they have a hospitality school, I feel like, I don't know what the before was like, but I've seen the after. I think that they must have been underperforming in that experiential aspect of what that hotel is that I've experienced staying there and having worked on it with Berman Falk. But I want to, as an owner of 5 properties in and around there, what strength did the designer, like if you look at Craig and his team, like how, you've known Craig for a long time, but what's so important about hiring the right design team to really change or reposition a hotel? And what was your experience specifically on that property with respect to Craig and his team?
So this was the first time our company sort of went into the RFP business, right? Where we had to put a real team together to get the business. Most of the deals we were doing prior to that, we just put together ourselves. We found an asset, a willing seller, or we found a site to build it, and we just sort of put the deal together organically. In this case, we had to put a team together that would be impressive to the university because they were going to select a preferred partner to acquire the asset.
You had to acquire with your team in tow.
Correct. So
wow.
So
Okay.
we had done a few other projects in the market. So the university knew us. They were using our hotels for various reasons. So we had a local general contractor that we had done a bunch of work with. We had a production architect that knew the local community, knew the code officers, knew how to get plans approved through the code office. But the missing piece of our deal was a design architect, because we had some local folks help us, but we needed someone with a great resume, a great book of business. And so we interviewed, 10 different design firms, including Craig's firm. And, again, as an owner investor, we're in the weeds for pretty much everything. And so we ended up selecting Craig's firm for a bunch of reasons. One of the reasons was I liked dealing with the owner of the company. And so I'm the owner, he's the owner, and he could hold me accountable for things I was doing and saying, and I could hold him accountable for the things that he was doing. And so what drew me to Craig's firm was the fact that he had done amazing work across the country, historic renovations, and pretty much everything you can do in hospitality. But he had sort of a blue collar mentality toward his job. And I mean that as a compliment, not as a negative. And so he said to me, Gary, I will design to your budget. And so to me, as an accountant, I'm a CPA. I started out as an accountant and was a CPA for a while. So that was music to my ears. He was of the 10 or 12 people we interviewed, he was the only person that told me that.
Wow.
Number one. And so that, and he also has procurement inside his firm. So he was designing and procuring at the same time. And so I like that as well. And so we brought Craig on, and he works hand in hand with our production architect. And we got this project done in 16 months. I mean, we worked really, really fast, and we wanted to be open for the first home football game of 2024. So that's what we did.
We have to have an offline conversation, because I didn't realize that was 16 months start to finish. We've implemented a new way of doing things that is doing things in 11 months start to finish.
Wow.
So but that's a whole separate conversation. One more question about Craig, and I love the owner to owner reference, but I think more than all the other accolades you gave him, knowing you not as well as I know Craig, and just seeing all the innovative things that you've done over your career and kind of your career arc, was it also that Craig is a developer, an architect, a restaurateur? He has a purchasing function in his company. He does the design. He's a musician. I just feel like you both are so, I don't know, forward thinking and action, and not just talking about doing stuff, but actually doing really cool shit.
You know what? I marvel. I have zero artistic talent and zero musical talent. So whenever I meet someone who is artistic, both whether you can paint, draw, whatever that artistic talent is, or if you can play a musical instrument, you've won it in my book from that perspective, because I can't do any of that. Like I said, I was an accounting major in college. I started out as a CPA, so I'm more numbers driven. But Craig and I just hit it off. And I will tell you, Craig did something that really won my allegiance to him in a way. We were finishing the project. We were literally getting to the end of the project, and we were having some challenges with interior signage, right? Something you think is simple, but this building was very old. It was an old building. It was put together weird and complicated. So interior signage, just the directional, rooms this way, rooms that way, had to be very, very thought out. And we had some challenges. We ordered stuff. It wasn't right. We had to reorder it. And I was getting frustrated, a little bit grumpy, which I can be. If you ask anyone.
Did you yell at him?
I don't think I yelled. Craig might tell you I did, but hopefully I did it. Hopefully I did it. But here's what happened. Craig recognized that it was a problem. I recognized it as a problem. We needed to get it done. And Craig lives in New Jersey. This property is in central Pennsylvania. On a Saturday, Craig drove by himself from New Jersey to State College, Pennsylvania, and literally installed the signage himself. How many guys in Craig's position would do that?
I would say a few, not many. You'd probably have to wait. Do you know that the really frustrating thing about signage? I make things. You only notice signage when it's not working the right way. Right? So if you think about the person who does the signage, when it's all functioning in an airport, in a hotel, or anywhere, you just don't notice it. You just wind up where you're supposed to be somehow magically, right? But when it's not working, it is so annoying, and then you're only dealing with the problems. It's
exactly
really an unusual vocation. Yeah.
Yeah. But Craig said to me, "Don't worry, I'm going to take care of it." And I wasn't there the day, but I heard that he was on his way, got there, spent, I don't know how many hours and hours and hours in there, fixing it, putting new ones up, taking old ones down. And to me, that just, that's the way I work. I will tell you, Dan, that I've been in our buildings on a Friday night before a home football game, and one of our bars is packed, and I see the bartenders don't have any glassware. Yeah. I bust the tables, I'll wash the dishes and things like that. And I'm not telling you that to make myself feel better, but ultimately, as a small owner operator, I will literally do anything that's moral and legal to help my company be successful. And if that means I have to wash dishes or shovel snow, I'll do it. I started when I was a teenager. My grandparents owned an apartment in Atlantic City, New Jersey. And because of some of the lack of resources I had as a young person, I worked every summer. I lived with them in Atlantic City from the time I was 14 up until I graduated from high school. And I worked at various jobs on the boardwalk. I was a pot washer, a dishwasher, a prep cook, a fruit cutter, a short order cook. And so I sort of got hospitality a little bit in my blood, I guess, from as a young teenager. And then, ended up back in this business, now, which is really interesting part of the story, I think. But, I think Craig's mentality, I think my mentality is, we want to do really great work. We want to do innovative things. I want to do things. What's important to me is I'd like to do things that other people haven't done. You typically won't see us buying a traditionally branded hotel somewhere traditional and just sort of doing the blocking and tackling around that. it's fine. It can be a great business, and it's a great business for some, but it's not our business. Give me an ugly, tired, complicated deal. That's what we gravitate to, because frankly, that's where we can make more money. That's where the upside is, right? We're looking for that upside. And so when we took on the Penn State University deal, we spent 743 days from the time I heard the rumor in the market that they wanted to sell to the time we closed.
Wow.
We spent over a year just going through an RFQ and RFP phase, trying to convince the university that we were their right partner. And so that was really challenging. And then I went to Penn State. So for me, when we were awarded the project, I had the normal stresses of trying to raise capital. We brought in a great capital partner, third-party capital, equity capital partner. We borrowed a lot of money from a bank. So we had the normal stresses of a real estate investment and hospitality execution. But on the flip side, I probably had millions of eyeballs around the world saying to me, don't screw it up, right?
Yeah.
This asset's really important to the community. It's important. It's an important brand as well. And so certainly the Nittany Lion Inn project, which you and I worked on together, was the most challenging project I've ever done, both from a standpoint of the time it took us to actually acquire the asset, to doing the construction and development, and then executing on the hospitality side as well. We opened on the Tuesday before the first home football game. You can imagine we just rebuilt this old building. We had 120 employees that just started with us that didn't really know what the heck was going on. And we were sold out for like 3 months straight.
One of the demand drivers to get to stabilization for many markets is like summer or ski season. I always find projects that I work on in and around a college football team, and it's not like, it could just be a regular hotel near a college football team, not a graduate or scholar or anything else. It's just any property near a college football team. Invariably, they drag their feet in the beginning, like making decisions, or there's some entitlement things or something. And there's always a crazy mad rush for opening day of football. And the other surprising thing, I've been doing what I do for, I don't know, 25, 30 years. And it's only recently that I've realized, oh, it's college football, and I don't know why they don't say that at the beginning. We are opening for college football season, because then it changes the way people ask for conversations and ask for information that they need so that they can get it done by that hard opening. With summer and ski season, it's assumed, but I didn't realize that college football was such a crazy thing. And your rates must quadruple at those times too. So it's really important for you as an owner, more quintuple.
More. Yeah, they really do. And I think there's this whole ecosystem around football as well. So it's just not Friday and Saturday night before the home game. It's a week leading up to it. So a lot of the games are on TV. So we have TV crews that come in 4 or 5 days early to set the stage. Sometimes we get ESPN game day, right? Sometimes we're Fox Sports big noon kickoff, right? So there's this whole infrastructure that moves into the community and then ultimately moves back out after the game is over. But ultimately, when you have a large public university, when the students are on campus, which is typically 32 weeks a year, 2 15-week semesters, we're busy during those 32 weeks because there's so much else going on the campus besides football per se, right?
But the real time near a large public university, when you get through that stabilization period, like you have to get through the high season. You can estimate low season, but really investors and banks want to see the stabilized revenue of the property and profit of the property. But what's interesting, that is college football season. It's insane.
It really is. And I think, so the bigger thesis, let's say, around university hotels is my pitch, if you will, to the investment community is that if I own, let's compare a portfolio of 10 hotels, right? If I have 10 hotels that are all supported by large public universities, and then I have another portfolio of 10 hotels that aren't supported by that. They're supported by typical hospitality demand drivers, whether they're city, urban hotels, resort hotels, highway hotels, airport hotels, whatever it might be, a mixed bag of different hotels. my theory, and let's say we have the same exact net operating income that falls to the bottom line for the 10 hotels. Let's just call it $5 million of NOI from the 10 hotels. My thesis, my pitch to the investment community is my $5 million is worth more than the other $5 million. And so this is equivalent to credited, if you're I was in the office building business for a long time. There's a difference between having credit-worthy tenants in my office building versus non-credit-worthy tenants. So if my office building my tenants are Morgan Stanley, Microsoft, IBM, and Amazon in one building, or my other building, my tenants are Dan Incorporated, Gary Incorporated, Scholar Hotels, a group of small businesses, and they generate the same amount of income. Which income's worth more? Well, you're going to say, well, the guarantee of income from big corporate creditworthy tenants, that $2 million of income from this office building is worth more than this $2 million, because the chances of those companies paying the rent, not going out of business and things like that is guaranteed. So that income deserves a lower cap rate assigned to it, or more value, right? So the same thing would be with my 10 university hotels, right? My income is coming from these large public universities that are stable, they're growing, they're not relocating, and they're not going out of business, right? But the income from the other 10 hotels are coming from the typical ups and downs of the economy per se, and of various groups and people, et cetera. So what I would say is my $5 million of NOI deserves a 6.5 cap, and the other $5 million deserves an 8.5 cap. So I'm getting a 200 basis point value enhancement because the revenue from my revenue streams are more secure, more reliable, more consistent.
Until the Big 10 or Big 50, whatever it is now, until Penn State keeps going down and down and down and gets below USC in the Big 10 rankings.
Even if that happens, Dan,
that's not going to happen.
So here's the beauty of it, right? Even if my football team's not playing so well, people are still coming. We're still selling out 106,000 people in the stadium, for the most part. So we also have a great wrestling team. We have great women's volleyball team. We have some of the best theater and cultural events that happen on our campus. So we have the largest student fundraiser in the country, Penn State's Dance Marathon. I think they raised like $20 million last year through this thing. So there's always, when you have a large public university, there's always something happening on campus, and my hotels are filled every weekend.
And let's not forget the great ice cream that everyone just has to try. It's awesome. And the cows are like right there. You can
right there. Yeah.
The cows. It's unbelievable.
One of our desserts at the Nittany Lion Inn, we always have it, is a trio of ice cream. You get to pick 3 flavors, and it comes right from the creamery.
That's awesome. Gary, if people wanted to learn more about you, the Reg A, and what you have going on with Scholar, what's a good way for them to connect, learn more?
Yeah.
I'm sure you'll be advertising this raise and all the channels and LinkedIn, but aside from that, what's a good way for them to get in touch to learn more?
So I think the best way would be through LinkedIn. That's the way a lot of people reach out to me. So if you just put my name into the search bar, you'll find me. Send me a connection. I'd love to connect with as many people as I can. Our Reg A initiative and offering has its own website. It's scholarh8.com. So the legal name of our investment offering is Scholar Hospitality Holdings. So there's a website called Scholar with 2 H's. So scholarh.com. And our website is scholarhotels.com.
Cool.
So you can go to any of those locations. But, our goal as a company, and my goal personally, is to try to push the envelope and do things that other folks aren't doing. Take on complicated projects where we can create value and create a great experience. Ultimately, if we're profitable, getting back to what we talked about before, if I can create profitable investments on the real estate side, then man, I've got so many tools and resources to provide a great experience for my guests.
I want to finish with an image, and I guess you said you weren't there, but when Craig was hanging all those signs, did he have a tool belt and a guitar, or just a tool belt?
I don't think he had a guitar, because I think I would have heard about that. But
okay.
That's one of the things that I have to reconnect with Craig on, is his music career, because I want to know more about him.
He's so awesome. We got to start a Craig Kalachian fan club.
Craig's a Renaissance man. Let's just call him what he is, right?
Yeah.
And I'm just an accountant that's in the hospitality business. Basically, that's sort of the way I frame it.
Well, when he
But
went out there to go change all those signs, it was sad to hear that he drove by himself. Because when we were speaking at Penn State, I swung from Connecticut down to him in Jersey, and we road trip together
oh, you
there.
did?
And
Okay.
it was awesome. I need a
Yeah.
road trip with Craig.
Yeah. Yeah.
gonna set-
And you know, it was funny when we first started the project. They had direct flights from Newark right to State College.
oh,
So
wow.
I think Craig was hopping the flights, 20 or 30-minute flight, and you were there, and then they canceled them, so there were no
Yeah.
more. So they had to drive. But
Yeah, that's a
but
nice drive.
yeah, it was. I will tell you, just to sum it up, that project, acquiring those hotels from the university, doing the renovate. There was another one too that was another hotel that we acquired with the Nittany Lion Inn.
Yeah.
Was the most challenging, difficult project I've ever done in my 35-year career. And when you do something really, really hard and challenging, you hope it's your best outcome. And I think we're on track for that to happen here, which is really
Awesome.
great. Which is really
Well, I wish you incredible amounts of success. I can't wait to hear how this raise is going. And I know so many parents and kids that are going to Penn State. A lot of my old friends, well, they're not old, but they're friends of mine went there, and I think that it's really cool. And I hope it catches fire, and I hope it's a model that's replicable, and that it brings you lots of success and all of your investors lots of success. So thank you very much for sharing this and
you.
being innovative and just being a great guy. And I appreciate you.
Thanks, Dan. I appreciate it as well. Great working with you. I hope we have the chance to do it again.
Yes, I'm sure we will. And to all of our listeners, if you know someone who went to Penn State, send this to them. Who knows? Maybe they'll be really excited. If this changed your way of thinking about how to be innovative in our multifaceted hospitality industry, please don't forget to like and subscribe and pass it on to anyone else who you think might benefit from learning from here. Thank you all very much. We'll catch you next time.